Hi, this is James A. Full Capital, and I'm here with JC Castillo. JC, how's it going, man?
Hey, it's doing great. All is well. Thanks a lot for having me.
So, JC, to kick it off, let's go through sort of your background and then tell us more about Velo.
Yeah, sure. So, I mean, I've been an owner, operator, and management company, third-party management provider for the last 15 plus years in the Texas slash Dallas Fort Worth market, and have bought and sold thousands of units, have developed, have repositioned all the way up from workforce housing to brand new A-class buildings. So, a lot of knowledge. Built a couple of management companies from the ground up to support all of the multifamily business that we do. So, just a lot of working knowledge in the operations side and the ownership and side of multifamily in general.
So, go back and give a little bit of your history. Most people, when they graduate college, their first deal is not, "Hey, I'm buying a 100-unit property in Texas." So, give people a little bit of sort of your background into multifamily, but then also the management side too.
Yeah, for sure. Well, I'm a tech guy by background, and in the Silicon Valley for 15, 20 years in terms of semiconductor career. Originally started off in real estate like a lot of other people, just looking to create my own retirement fund in a way. And so I started in the mid 2000s, bought a single family rental, and quickly moved up the scale and into multifamily, and started doing business in Texas in 2006 timeframe, and built a business out in Texas from California, but really was focused on multifamily from almost the very beginning. And I saw a lot of great things, I think, hopefully happening in Texas that many years ago, and it's proven to be, very, very true. I opened up my own, in addition to, being an owner operator, opened up my own management company in 2013, and built an owner operated property management company in house from the ground up, and that is still running today. But more recently, and more importantly, the biggest thing that we did was, in about 3 years ago, I opened up our third party property management company called Velo Residential. Again, Velo Residential. And so Velo is a Texas based third party property manager that is completely focused on managing large scale multifamily. And we are based and operating out of the Dallas Fort Worth area.
So, and if I don't, you don't have to give exact numbers, but roughly on the GP side, how many units do you guys own and manage? And then on the Velo side, roughly how many properties or units, whatever's the easiest, just give
Yeah,
people an idea
sure.
of, yeah.
We're about 1,300 or so units on the owner operator side, and we are about 2,000 units on the third party
Third party side.
Velo residential property management side.
Okay, so it's been about 3 or 4 years on the Velo side. What have you seen? What have you learned over those 3 or 4 years? I know it's a lot, but sort of coming into the business, obviously a ton has changed, right? I mean, you stepped into the business when it was red hot, with just a ton of transactions, ton of acquisitions, and now the past 2 years after the Fed raised rates so quickly, it's been a little bit slower. So talk about sort of the market, sort of what you're seeing with owners, maybe over the last couple years.
Yeah, the most important thing that I've learned, and I've learned this not just with Velo Residential, again, we're 3 years old as a company, but what I've learned as an owner operator, and again, I kind of think more like an owner than I do as a property manager. I've learned that the biggest differentiator for a property that makes money versus a property that loses money, more or less all things other than that being equal, is really the quality of your site staff. Your site staff really will make or break your investment as an owner. And so as a management company and as an owner, the biggest thing that we can all do is be focused on how we are setting up the site staff to be successful. Now, you need great accounting, you need a great back office for sure, you need great HR. All of those things are table stakes, but when we talk about the real differentiation of what Velo is set up to do and what we feel is really the most important thing for the success, the financial viability and success of an owner's business model, it is really having great on-site staff, but also more importantly, how you are setting up the staff to be successful. Look, let's face it. as an owner, when you buy a property and you're entrusting a multi-million-dollar asset into the hands of a site staff and a management company, basically what happens is your site staff are getting, for the most part, with most traditional management companies, they're getting buried with a bunch of back office work that you're expecting them to do, which isn't really moving the needle in terms of making your residents happy and making your property perform. So, for example, if you have a property with a set of site staff and those site staff are having to punch in invoices into the system, is that really a function that's going to make them be the most, is that the best use of their time as site staff, right? So in other words, would you rather have your office manager showing a unit with a prospect, or would you rather have them typing in an invoice into the system? So the challenge with site staff is we want them to, and we know that they're a big part of our success, but we don't set them up for success. So what we've done as a company at Velo is we've solved that problem by basically breaking out all of the back office work into centralized and specialized functions where we take all of that back office work off of the site staff's plate. And we do that with central team that removes all of that work off of the site staff's plate. So your site manager is freed up to knock on doors and collect delinquent rents. They're freed up to show prospects around, give them the tour. They're freed up to pay attention to that resident when they're coming in the door with some sort of a work order or some sort of a problem that they have. Their phones are not ringing off the hook because we have artificial intelligence and we have technology to assist them in taking the initial prospect inbound calls and marketing leads that are coming in. So their offices are more quiet. The phones aren't ringing off the hook. So they're able to really focus in on, like we like to say, shaking hands and kissing babies. And that's really what's going to move the revenue needle for you. And that is to say, as an owner, putting butts in the seats in terms of vacants and keeping the existing butts in the seats happy and renewing their leases. And so for us at Velo Residential, we've really sort of have broken ground and developed brand new effective ways to really centralize that back office work and give your site staff the freedom and the ability to do what's going to move your revenue needle and your profit needles the most as owners. And that's really kind of what we're doing at Velo and how we're doing things differently.
So besides sort of the invoice stuff and the AI stuff, is there anything else that that you think is differentiators for you guys, that maybe when you first started, you thought everyone did this, but then now that you've done it for a little bit, a couple of those differentiators on the property management side, because obviously, people have, they have a choice. They can either self-manage the deal, they could call a third party property management company, and there's a couple here in DFW. So, any other differentiators besides the centralization of sort of the invoicing and the prospecting
Yeah,
piece?
sure. I mean, another area where we've gone deep is what we call resident retention. Resident retention, I think, is an often, and actually resident retention is getting a lot more, legs these days because people are realizing that it's a lot harder to find new prospects and get your units leased. So they're wanting to focus on renewals. But we've got a whole specialized team of central agents that focus on resident retention. And what I mean by that is they're focused on a couple things. Number one is they're focused on work orders. So these central agents are paying attention to work orders as they're coming in. They're actually making sure that the work orders are being followed up. And not only that, but they're checking in with the residents with either a text or phone call after the work orders are done and saying, "Hey, Mrs. Jones, I know that we just came in and fixed your broken sink. Did everything go the way it was planned?" Right. And so the resident retention piece is there because if we do all those things right, like if they have a great move-in experience and all of the unit features are very functional and working, the unit's clean, and if the work orders are taken care of in a timely fashion and done right, then we know that when it comes time for renewal, they're more likely to renew. And so we've got these resident retention agents that are focused on that experience while they're at the property. That's making a huge difference for us in terms of the resident retention rates. Another thing that we're doing that's really, I think, different and groundbreaking is we actually have put on our team what we call a client success manager. What is a client success manager? Well, in a traditional third-party management model, the owners usually have a regional manager that's assigned to their portfolio. And so if the owner has problems, they were more often than not, they'll call their regional manager and or email them and say, hey, I need you to go check up on this. I need you to, check this invoice or check this. We're supposed to have this inspection done by the lender. Um, the regional manager is super busy managing, a portfolio of properties, and they don't always have the time dedicated to be able to get back to that owner request. So what we did was we put a dedicated client success manager that is in charge of working with the owners, for example, supporting weekly owner calls, and sort of like the assistant to the regional to do all of this blocking and tackling in terms of making sure that the owners are getting all of their actions answered, their emails answered. And so the client success managers are actually real people that are dedicated on our teams that get assigned when we onboard a new client. And they actually are supporting the owners and making sure and supporting the regional manager to get all those things done that in a lot of instances tend to fall through the cracks with a traditional management setup. Those are
Are all
a
these
couple more
guys
examples.
yeah, are all these, people, like, in Dallas? Are they remote, like, in, California,
Yeah,
Colorado, or wherever?
they're located internationally. These are
Okay.
global team members that
Yeah,
have a great internet connection, can do
yeah,
Zooms, have, fantastic speaking capabilities in English,
okay.
and are able to get the job done over email, Slack, text as needed.
Okay. And then, I think everybody's wondering, like, obviously we see a lot of financial statements and rent rolls and things like that, but you guys are on the ground, I mean, managing these units. What are you seeing right now? So I guess I don't know if the geographic of the 2000 units, is it mostly DFW or is it outlying areas of
Yeah,
DFW?
it's mostly all DFW. We also have a presence in Tyler, which I
Okay.
would really call sort of fringe Dallas Fort Worth. Yes.
East Dallas.
Hmm.
So, what are you seeing right now? And I don't know, is it A, B, C? Is there maybe if you can break out, are most of the stuff B and C stuff, or what's
Yeah,
the
I'll kind of
portfolio?
speak to I'll speak to sort of like a combined view of like some of the stuff. Again, we have about 1,300 or so units on the owner operator side. We have another 2,000 on the Velo side. That's third party.
Got it.
Um, on the ownership side, we have a lot more of what I would say the A stuff, the more of the luxury stuff, the brand new stuff. And on the Velo side, we have a lot. We're focused on the B and C space. What I'm seeing across the boards right now is that supply coming into the market is creating a really competitive environment across the board. I'm definitely, even in the C space, I'm seeing rents starting to drop. They're at least flatlining. They're not going up. And I'm definitely seeing concessions even for C stuff. We're also seeing things like, we've got owner operators out there that are struggling to stay afloat that are, sort of, let's say, 60%, 70% occupied. They may have floating rate loans. They may be struggling to make their debt service. And they are doing anything that they can to get warm bodies into their units right now. So if you have a property that's down the street that's competing for your business and they're giving a month free of concession move-ins, they're giving discounted rents, that's going to impact your ability to maintain your competitive rents and do it without having lease concessions. So what we're seeing right now is we're seeing that we're competing with some of these properties by starting to offer rent concessions. We're starting to compete on the rental side with rental rates that are a little bit better. We're negotiating with renewing residents, by the way, big time. If we can keep an existing butt in the seat right now, it is worth a lot more than letting that person leave over, 20, 50, $75 and having to turn that unit because it's really hard to actually get a new person in that unit. And by the way, we're seeing a lot of fraud. Make sure that if you're working with a third party manager, you ask them about their fraud detection capabilities. Things like having ID checks and selfie checks to make sure that the person that's on the ID is actually the person in front of you. Having software screening capabilities to detect fraud on pay stubs. That's a big one. People are editing these pay stubs from, ADP, and they're adding a couple zeros to it. And, presto, people are moving in when they don't even have jobs or aren't making the 2.5 or 3x income qualifications. So, all told right now, it's definitely a lot more challenging to, keep the revenue side, at tip top condition. And we're fighting a lot of headwinds that are related to, fraud. And we're also fighting a lot of headwinds related to supply coming online, which is definitely impacting us from A's all the way down to C's.
So, a lot of people bought properties, let's say 21, 22. They were on a bridge loan, and now those are coming due, and they're trying to get to a refinance, with Fannie and Freddie. What advice would you give to those people? Because you obviously have your owner hat on, and you maybe had to do a couple of those, and then also on the property management side, with that backdrop of the market, right? So, what advice would you have for those people?
Yeah, it's really interesting. I mean, look, the biggest thing you can do as an owner is if you've got a floating rate loan and you are trying to refi out into a new loan, or if you're running into struggles with your existing loan and you're just trying to make it to the other side, the biggest thing that I've seen that's made a huge difference, and I've seen owners play it well, and I've seen owners play it not so well, is the communication with the lender is not there. So meaning if you're trying to make it to the other side and you've got an existing loan with maybe a rate cap that's coming up, or maybe you've got some cash flow issues, and heck, in a worst case scenario, maybe you don't even have enough money to make the mortgage payment. I've seen properties where owners will decide not to pay the mortgage so that they can start to, um, you know, pay their other expenses, keep payroll going, right? If you go into a hole in the ground and you don't talk to the lender ahead of time and let them know what you're doing, they seem to get really, really frustrated, and they almost will play hardball with you to get you to come around because you're not communicating. On the other hand, I've seen owners that have done a great job of letting the lender know ahead of time what their plans are, even if it might be a little bit on the ugly side. And because of that communication, it might not be pretty, but there's more, I think, ability to get things done in an expedient manner because of it. So if you are in a situation that where you need to make some moves and they may not be the greatest, it'll be the best of a bunch of bad, choices. Getting hold of that lender and letting them know what your plans are up front and asking for their help is really the right thing to do. And I'm actually seeing lenders out there that are starting to modify loans. I'm even seeing lenders that are starting to go to fixed rates for a little bit. Like if you've got a floating rate loan at 9.xx%, amazingly enough, I've heard deals where people are willing to lock in. Now you've got to do some things on this. You've got to bring some capital in, you've got to put some interest reserves in, but I'm seeing places where, lenders are saying, okay, we'll fix your rate to 7% for X number of years. If you bring in this much money, you
One
do
year.
this X, Y, and Z. Yeah, 1 year.
1 year.
And so these things are happening, but the owners that are just, not communicating are the ones that are really going down in flames because there's nothing that they can do in either case.
Well, I definitely do agree on communication with the lender to make sure they know your business plan, sort of how you're going to get out of this, how you're going to refinance us out. Um, my question was more around, okay, so you're struggling at the property level and you're trying to qualify for this new loan. What is there any strategy that's different? Obviously, everyone wants the highest rent and lowest expenses. I get that. But is there any strategies right now that you guys are implementing in today's market for these types of properties that people are where maybe there's more of a focus right now?
You've got to think outside the box. I'll give you an example of a deal that I felt like was a perfect example of that. We had a deal that was a market rate deal. It was sitting next to a university, and we were struggling to get the property back up to stabilization, and the owner was struggling with a floating rate loan, and there was a lot of bad things that would happen. We got together. We started talking to a lot of people. We were managing the property. We started talking to a lot of people, and one person had the idea, hey, why don't you go talk to the university and see if they might do some sort of a master lease? The university's got a lot of students there, and you guys are next door. Long story short, we went to go talk to them. We ended up signing a 120 unit master lease. Now, it took a little bit of time to do it, probably about 6 months or so. But because we thought outside the box and started talking to a lot of different people and got an idea, and went to that owner and said, hey, here's our idea, let's go try it out. And everything lined up and the university was interested. And the situation was, hey, we thought we can't just go try to lease, you know, 10 units. We're in a situation where we got to think big. We got to think different. We got to think outside the box. And so, that's an example of how you can go big and try to plug a gap that if you're doing it a traditional way, it's just not going to happen. Now, I know not everybody has a university sitting next to them, but the point I'm making is this, is that you really have to, between the management company and the ownership, you've got to start to think outside the box. We got another property where we were struggling with occupancy, and we looked at the marketing piece, and we realized that we were outdated with our marketing. The website looked a little tired. The photos and the videos weren't there. The way that the website was presented just wasn't showing well. So we actually spent about $3,000. We did a whole facelift on the website, redid all the photos and videos, did everything, and we got the property looking great online. And wouldn't you know it, we've started to see a lot of traction and things are starting to happen again. So it's not always just a question of, hey, can we slash expenses, or how can we, can we not fix this thing or not fix that thing? We're going to do all those things. If we can put off expenses, we're going to do that. But you really have to think outside the box and start going, look, what can we do to uplift ourselves above the competition in this market? What can we do to think outside the box?
What do you think the number one driver of traffic into a multifamily property is today? Because a lot of times, we'll look at reports, whether they're from Resman and what have you, and people, even I do it, like when they're like, how did you find out about us? And you click Google or whatever, right? Like it's just so hard to track the marketing piece of people coming in the door, and you obviously want qualified traffic of people coming in. So have you guys looked into that or figured
We
that?
do. We
Okay.
study it every day,
Yeah.
and every day we also are trying to figure out what's the best way to actually track lead sourcing. And it's not an exact science, because if someone goes to apartments.com and they see your ad, and they go to
The
and they may
website
remember
and
it, but
then
then they're
yeah,
going to go to the website the next day, and they're not necessarily going to go from apartments.com. Well, that's going to look like a website lead, but really it was
right,
an apartments.com lead, right?
right.
So, but having said that, even still right now, your biggest source of leads at any property is the local community. It's drive-bys, it's people finding out about your property by hearing from other residents that are living at your property. It's people going to your Google business listing and looking at the reviews and reading them and going, hey, is this a property that I feel like I want to live at?
People read
So
the reviews.
absolutely, they read the reviews. It is mind-blowing how many times I have looked at a set of Google reviews for a property and seen so many negative comments, and the owners aren't actually aware of
Right.
how bad the reviews are.
Sure.
And so one of the first things that we do is we work on that, right? We
Yeah.
work on getting the reputation back up. It doesn't happen overnight, but believe me, good renters, the first thing they're doing is they're looking at your Google reviews, and they are not even going to give you the time of day if it's a bad
Yeah, they're not
reputation.
even coming, they're not coming in, right? They're not going to
Yeah,
the website. They're not okay.
they're
Got it.
absolutely not.
Well, JC, I know we could go on for a while here, but I appreciate you coming on. And if anyone has any questions about engaging you guys to maybe look at a property that they're acquiring or currently owning, what's the best way for them to reach out to you to get more information?
Yeah, very, very simple. Just go to our website, veloresidential.com. Again, V like Victor, ELO, veloresidential.com. Click on the schedule a consultation button. It's pretty much as easy as that. And you can pick a time that works for you. And that's the way that you can open up the discussion.
Okay. All right. I appreciate it, JC. We will see you here in a couple months at the conference, and we'll catch up then.
Thanks, James. Looking forward to it. Appreciate it.
All right. See ya.